Dear viewers, who doesn't like real estate? Everybody wants to invest in real estate. Real estate is such an attractive investment option, it doesn't need a financial advisor. But the problem of real estate is it requires loads of money. You have to fight with the brokers, you have to fight with the authorities. The problem of tenant, the problem of asset management, problem of filing tax returns. All these things will make you think for the second time, should I invest in real estate or not? What if somebody is able to solve all these problems? Today I'm going to talk to one person, Mr. Sudarshan Lodha, CEO of Strata, who has revolutionized this industry and solved many of the problems of real estate investment. This is NRI Money Clinic for you, and I am Dr. Chandrakant, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, this is a special section on NRI Money Clinic. We have titled it as People Who Matter, where I'll be interviewing periodically personalities who have made news, personalities who have brought changes, personalities who have solved problems, personalities whose views will really matter. In this episode, I'm going to talk to one person, Mr. Sudarshan Lodha, CEO of Strata, who has revolutionized investing in real estate. Mr. Sudarshan Lodha has solved a lot of problems of investors while they invest in real estate. Let me first introduce Mr. Sudarshan Lodha to you all. Mr. Sudarshan Lodha has over a decade of experience in real estate and private equity law. He started his career at the Office of Solicitor General of India and was an advisor to IIT Madras. Prior to Strata, Sudarshan handled commercial leases, acquisitions and sales, joint ventures, private equity investments, and also complex transaction structuring in commercial real estate. He was closely involved in several private equity and venture capital transactions in India and has represented over $1.4 billion in investment. With Strata, his vision is to focus towards offering premium commercial real estate investments accessible to everyone and drive the adoption of technology in the real estate industry. Mr. Sudarshan Lodha, welcome to this show.
Thank you so much, sir, for having me on this.
Mr. Lodha, you are in the news. You have revolutionized investing into real estate in India, particularly the commercial real estate. Everybody invests in the residential real estate, but commercial real estate was not something which was available for each and everyone with the loads of money required. But how did this idea come up in your mind, and how did you make it available for every general public now?
So the whole idea started with the savings which me and my wife both had. She's also my co-founder in this business. We had close to about 1.5-2 crores of savings which we wanted to invest into commercial real estate. Fortunately, my dad had bought homes, so I didn't have to buy another house for myself, or I didn't have such aspirations to build a larger home or anything of that sort. So we went out to find assets which we can buy as such. We found one very beautiful asset which we wanted, but that was about 10 crores. At that time, we had two to do it. So as a typical person, what people do, call up friends, call up family, hey, would you want to invest, etc. Both of us come from Chennai. We moved to Bangalore in 2017. So it's been 6 years now in Bangalore as such. What has been the entire learning with that episode has been that when you go to your friends and say, I want to make an invest, they might have two things in you. First, they might doubt, why is Sudarshan bringing this opportunity to me? He has the money, why does he need me? Is he making some money out of me as well? That's one. So trust issues, I would say. Second, which would be, is they might either not see the kind of opportunity you see in a particular opportunity. As such, like I say Bangalore is growing, but for my friend in Chennai, he says, no, I don't think so, Bangalore is growing. Bangalore is already oversaturated. Chennai is growing, you should come and invest in Chennai. Or he might not have the generic liquidity at that point of time for him to buy a property as such, right? So that was the genesis of that, and that property slipped from my hand, right? So the genesis was that how do we solve for this issue where I want to invest into something, and there may be a lot of like-minded people in India who may want to buy it, but today are not investing either of these three, right? They're not seeing the vision, they don't have the liquidity, or they have trust issues as such. So that was the genesis of Strata, that how can we structure a platform which India can trust on, which globally people could trust on, where all these three things are taken care of, right? No trust issues because the platform can govern for you. liquidity, you have liquidity, the other investor might not have liquidity issue. You probably don't see Bangalore as a growth opportunity, but somebody else sees Bangalore as a growth opportunity, right? So the idea was to cover these three things through a platform which becomes a neutral body or a custodian of sorts, who takes care of everyone's interest, has no other agenda or interest except making money for investors. And that was the whole start of Strata.
Very nice. Within a short span of 3 years, I know during the course of interaction with you, we realized that both NRI Money Clinic and Strata started simultaneously. We started in January 2020, and both of us are growing leaps and bounds. Initially, it was a difficult journey, but over a period of time, who all have joined you as the stakeholders? Any prominent names who have joined as the stakeholders?
Sure. I mean, going to your first question of 2020, right? I think for both of us, one of the biggest advantages has been pandemic.
Yes.
One of those few businesses where pandemic has allowed us to scale. So when we started in Jan 2020 and when pandemic hit, you were like, hey, for us at least it was there, who's going to invest in commercial real estate? But that was the tipping point for us from a business standpoint, and that attracted the best stakeholders because of the bold call we took. Or I would say our conviction was strong enough for us to continue doing our business despite the pandemic, etc. So today we, in our first round of funding which we raised, we had Elevation Capital and Mayfield. So Elevation is your early investors of Swiggy, Make My Trip, Book My Show, Meesho, Unacademy, Urban Company, etc. of the likes. And Mayfield, which was your early investors of BharatMatrimony.com, Simply Learn, Licious, etc., etc. So that's the kind of thing we started scaling. Like I said, pandemic was our tipping point because we could reach to our target audience and tell them about, hey, this is my idea, this is what I want to do it, and why don't you consider this also as an alternative as such. So I think during pandemic where people were all at home, they had all the time to hear us and trust us with the capital, and that's been probably the best investments we made till date in terms of that specific year of investments. Going forward, in June 2021, we then had Kotak Investment Advisors. It's a arm of Kotak, which is a private equity arm of Kotak. They manage about $8 billion in India. Pioneers of private equity in real estate in India. Then we had Gruhas, which is a prop tech arm of Nikhil Kamath from Zerodha, and Abhijit Pai is another prominent investor who only invests in prop tech and climate tech kind of companies as such. And we had an investment from DLF Family Office. So this round was more strategic for us because what we've realized as we went in deeper is it's not just money which can solve this business, it's knowing where not to invest which can solve this business, right? So when I have these three stakeholders and other stakeholders who are there as part of the company, we get to know who not to back, which market to look at, because those investors are also investing in those markets. So we get super data-led information. We get information where large capital is moving, in which direction, and we are trying to get our investors also to move in that particular direction, right? So that has become a real game changer for us to scale faster as well.
So needless to say, with so many big names behind you now, you need no introduction, you need no marketing. What started with a small conviction is growing into a very, very big idea now. Mr. Lodha, this fractional real estate is not such a popular concept in India. It is something new. But with your experience and the knowledge of this industry, is it present in any other country? Is it popular elsewhere? Or the way you have built it, is it something different in India? Can you throw some light on that?
Sure. So fractional real estate as a thing has been common in India since 60, 70 years now, which means friends have bought properties together. Families have brought the property together. Just that from a platform standpoint, as a neutral body, as a tech platform, it's only 2020, when we started the business, we started educating people what we do, how we do, etc. But across the West, to your point, across the globe, it's a $20 billion industry in the US alone. Right now, with close to 7-8 players all having more than $1 to $5 billion in terms of AUM. The largest player has over $5 billion. UK, it is prominent. Dubai, it is prominent now. Singapore, it is. Australia, it is. So all these large developing markets where they've realized that as the markets are maturing, which means real estate prices are increasing, there is a need for democratizing the entire piece, right? So that's where the whole journey is. While we can say that, okay, did you see them and start something like that? Unfortunately, you can't always copy paste American or British models. India is very, very different. Indian investors think very differently. So we've had to adopt our model quite a lot to the Indian demographic and scenario vis-a-vis what you can see in the West as such. But a very similar platforms are there in the US and UK who have really scaled, and it's only a 6 to 7 year phenomenon. It's not that it's a 10-year-old industry as such. It all started, I think, if I'm not wrong, in 2015, 2016, which is now the biggest player who started his company. So he's about 7-8 years old as such from an industry standpoint.
So even from a global perspective, it is a very young industry. It's a sunrise industry still.
Yes, you're right. It is a sunrise industry, but like I said, just US is $20 billion. 20 billion in India is half of Bangalore to acquire, right? So hence from that parameter, it is young from a industry standpoint, but obviously shows a lot of promise as we move forward, which is why it is becoming, so many players are there and so many other countries are also now seeing, a lot of platforms like ours trying to come and democratize the entire commercial real estate business.
Mr. Lodha, I understand that this is a new concept, but as things stand today, how big is this industry in India today? What is the rate at which it is going, and what might unfold in future in this industry?
Sure. So I think the total industry market is about 2,500 crores right now, where we have over 1,000 crores in terms of our market share. So we're about 40, 45%, 50% I would say to some extent as market owners of this particular space. So as such, but the way industry is growing, at least I can say from our standpoint, the first year of business we did 80 crores. Second year we added an additional 300, and last year we added 600, right? So you see from our growth standpoint also from 0 to 80, 80 to 300, 300 to 1,000 crores where we are today, right? So there is a lot of enthusiasm in the industry in itself, especially the investors who have been giving us a lot of feedback, have been acknowledging our work which we've been doing, have come back and given us tremendous amount of feedback on how we can improvise, because at the end of the day, we're building a platform for them. It is, so you tell me how you want and I'll happily build it exactly as per you want. So promise from an industry standpoint, if you see, I think it'll be a $5-10 billion market in India alone in the next 5 to 7 years. So 2030, you might see this being a $10 billion industry, and we hopefully have 70-80% market share. That's the vision.
Very interesting. Within a short span of time, you have close to 50% of the market share. You are the lead player in this industry. And I can imagine how it will grow. And real estate doesn't require an advertisement board. Yeah. You solve the problem and people are there to support you there. Yeah. Mr. Lodha, when you have ventured into this field of fractional commercial real estate, you have kept the residential real estate apart. Now, when I talk about the commercial real estate, it's a very vast subject. So what type of assets you have brought it under your consideration now, till now, and what are the future possibilities of which all the types of commercial real estate which can be brought under this?
Correct. So we started with warehousing business as our first asset during the pandemic as such when we did. So our current portfolio stands warehousing, a strong believer of the whole industrial market in India, C+1, China, so the whole world has been talking about it. So we've been very aggressive in industrial facilities as well, trying to do, and we have long lock-in, so we're very excited about that. We've been investing in office assets, which I'm sure most of the investors who have commercial real estate only have office asset under their portfolio. So we've given an opportunity for investors to diversify across warehousing and industrial as well. We have retail asset. We don't do malls, but we do high street retail with a clear reason that there is a opportunity for us to redevelop these assets in future for investors and make far better returns, because these are on the high streets of prominent markets. We're now getting into hospital real estate. Very strong thesis and focus around hospital real estate. We are 0.6 to 0.7 beds per thousand vis-a-vis US, which is at 6 beds per thousand. So clearly under-penetrated, and with more insurance sector being penetrated, awareness for insurance with investors are penetrating, I think people can afford quality healthcare. So that is one other part of the business which we're going to. Soon looking at business hotels, which means I don't need to take tourism risks as such. That's another segment which we've been actively pursuing. Soon to get some opportunity around that as well. But these are predominantly the kind of sectors. Many people have questioned us, why are you not in data centers, etc. I think it's very nascent stage in India. We don't want to take such an early call and burn our fingers down. Institutions with larger appetite can probably do it. The way when we invest for our investors, we look at that if you are investing, probably that's your only money you probably might give me for the next 5 years as well, which means I need to do justice for every money. I don't have the luxury or comfort to play risks with your capital at any given point of time, right? So that way we play very safe. The kind of asset class we go after are in more mature micro markets. We don't like to take bets which are aggressive in nature. And the approach is we are asset managers at the end of the day. So the idea is to go in a market where you can own a lion's share of a market. Otherwise, there is no point entering into the market because I need to know every landlord, I need to know every developer, I need to know every broker in the market who can help me lease this particular property in future. And then the same brokers, etc., can help me sell this property in future as well, right? So there's no point, okay, there's a very attractive asset in Kolkata, let's go invest. There's a very attractive investment in Delhi, let's go invest. We like to invest only if I foresee that I can make a large portfolio in that particular market so that I can do justice to my investors' assets which they own in terms of managing their assets on a regular basis.
Mr. Lodha, real estate is attractive, I agree, but it comes with a package of problems. You need tons of money, and you know the problem of tenant. You get into a bad tenant, you have a problem. Whether the documents are genuine or not is an issue. You can't trust the brokers. And my community of NRI sits in some country, asset is here. Who will manage the asset? For everything, they can't keep on coming here. How does the fractional real estate solve these problems? Does it really solve it? Or we are still back with the same set of problems here?
So to answer your question in a simple nutshell is all the problems you brought out is what we solve for. Let me start one by one. First about capital. A normal, typical, good commercial relation, the assets we've done, minimum is 25-30 crores. We've done the largest we've done is 180 crores. It becomes sometimes impossible for one person in general to buy. It is not about lifetime savings. It's sometimes lifetime earnings required for you to buy a 50-100 crore property, right? It's not that everyone has that kind of competency to make that kind of salary and compensation or profit from business as such. So this is what we did, and in investment world, I'm sure you captured in multiple of your conversations, diversify your investment, right? Real estate never offers that. You put in 1, 2, 3 crores, which can be probably 20, 30 or even 70% for certain people I've spoken to of their net worth into one property itself. It's a very, very large concentration, which means you're taking a bet on one city, on one micro market, one type of tenant maybe, if you're buying an office, assume, or if it's a residential, and you're taking a huge tenant industry exposure as well, which means let's say tomorrow BFSI crashes, then your tenants are also off, right? So the idea was diversification, not having a concentration exposure. So we have investors who invested in all the 4 assets as well with us. They bought a warehouse in Jaipur, they bought an industrial facility in Hosur, they bought an office asset in Bombay, in Chennai, in Hyderabad, a retail asset in Chennai. So it's a very, very different basket of investments which people can do and diversify their investment assets.
Which means to say it is not only diversification from different asset, different geographies as well.
So different asset type, different geographies, different tenant types as well, and different micro markets. So in Bangalore itself, we've invested in 6 locations in Bangalore. So investors have put money in 6 because you hear also, right? Oh, if I would have invested probably in that market grew at much better pace than this. You can't take those calls. You should be very lucky. We are saying diversify so that hedge your over and above the market returns, even if you have a basket of investments per se, right? Another bigger challenge which many of the investors have is the whole asset management in general, right? And we are hardcore asset managers first as a part of our business, which means tenant goes, finding a new tenant, handling property issues, attending association meetings, paying the property tax, insurance. If suddenly government increases the property tax, fight with the government again to reduce the property tax back. Multiple things which we handle on a regular basis, including collecting rent from tenants on time. Like you said, a bad tenant can, completely take your mind up. We have one of our investors, at least I had a conversation, he has 7 apartments in Bangalore. He's a CEO of a very, very, very large IT company, and he spends every month at least 2 Sundays only going and meeting people, tracking his properties, because they're all individuals staying. Most of them are bachelors staying in his properties. They don't maintain well, they create issues. The owners called for the association meeting, etc. So the idea was to traditionally, NRIs more importantly, have invested, or even Indians have invested into residential real estate only. The idea is that everyone knows commercial is better, just that it was out of reach, etc., and all sorts of complexities around it. That's what we solve for through the platform. So now you have an Accenture as a tenant, or a Swiss Bank as a tenant, or a Puma as a tenant. These are our tenants under our portfolio. They pay on time, they maintain their building very well, compliance and, the whole corporate governance at it's of its highest standards. And these are the learnings we've got from the problems investor, and even I had, right? Even my father had with his investments. And this is what we are solving at Strata today.
Mr. Lodha, you said about how you are able to solve the problems of real estate industry. I'm a financial planner. I advise people on various aspects where they have to invest and avoid. Our conversation is incomplete if we do not talk about the risks which are still remaining in real estate. As a promoter of Strata in this, what are the key risks an investor has to look into, avoid, or keep in mind while he invests into this fractional commercial real estate?
Got it. So, four risks, if I have to categorize, one is market risk. For whatever said and done, market risk is something it's inevitable for you and I, irrespectively, because everyone gets suffered in a particular market. And I'll come to that, what it is. Second is your real estate risk itself. Third is your legal and tenancy risk, I have to put it. And the other one is the platform risk, right? And I'll answer all four. First one, with respect to market, tomorrow another bomb gets thrown by another country, there are ripple effects which you can face part of your investment. And it's not just the real estate which will probably have, it is the last which will have the ripple effect, but it's market risk, right? Anything can happen with respect to that, and that is one very parameter. Or political risks, political stability changes if of a particular country or a state, cause of which, let's say, the state is not growing at the pace it could have grown, etc., etc. Those kind of risks which are associated. So you never lose capital, but your potential to make more money out of that capital is a risk which gets generated over there. Second is with respect to the real estate risk with legal itself is, so typically the kind of properties we buy are grade A properties leased by grade A clients. So there's 4 levels of due diligence done before we come. First, when a developer is buying, he does his due diligence, and he has an army of lawyers doing due diligence before he acquires. Then most of the developers don't have all the money, so they go take bank debt. So the bank comes and does due diligence over the particular property. Then we have a grade A client, whoever it is, they do their due diligence. So there's another layer of due diligence, and then we come in, we do our own due diligence, and then we do. So a lot of due diligence gets done, which is why a lot of the mitigation with respect to the legal and the real estate side of risks gets done, which means all the approvals are in order or not. Everybody makes these checks and balances before we come in, and likewise we also do a typical thing. Third is your tenancy risk. Your tenants can stay in this property forever, but your tenants can also move out, and you may need to find another tenant. So that duration between a tenant goes into a new tenant, and it's the same thing if you have to do
Dry periods.
Dry period, if you bought a property, a tenant left, finding another tenant, just that I can do a far better job because that's only my job. You may be an IT professional, you may be a businessman, you may be a diamond merchant, etc. That's not your core job. You only get a Sunday to do it. I do this Monday to Sunday, right? So that's a core thing, and our fees which we charge to our investors only linked if there's a tenant. If there's no tenant, then we don't charge you fees as well, which means it is of my interest to do the best for my investors so that I also make money at the end of the day. And the fourth risk is the platform risk in itself. I think for investors in general, you should do your due diligence. While KYC is a part, I think you should do KYP, know your platform, before you invest into into any of the opportunities. Because while we are asset managers, important for you to know who we are we backed by, what's their track record, what has been the performance of their investments. If there's a possibility where you can talk to other investors or advisors like you before they make a call, these are also very important. So KYP, know your platform, is also a risk which you need to mitigate by doing some homework before you decide to.
Investors have to keep in mind that it is not possible to make risk zero. That's not possible. But you can manage, you can minimize, you can limit the risk, you can do your best. Investing is all about how do you manage the risk. And in this case, at least, instead of putting a few crores of rupees into one single property, one single geography, the same money can be distributed at different places at different points of time. If things were to go wrong, all things will not go wrong simultaneously. That's something which really interested me as a planner to recommend to our clients, that this is a sector, this is an asset class which people have to really look with all the seriousness.
Yes.
When we talk to our clients, one of the questions that comes to my mind, or people often ask me, is it regulated? Lack of regulation is one thing which will prevent an orderly growth of an industry. But this is something which is in between the two extremes. No regulations on one side, highly regulated financial industry on the other side. You are in between. Is there anything really happening in regulating this industry? What is the latest news from this, and how you are coordinating with different bodies to bring in a regulation into this fractional commercial real estate?
Great. So this is also one of our commonly asked questions by people. Regulations are always good for any industry, for it to get more trust, confidence, protection for investors, awareness, etc. So no government in the world would always foresee okay, this is something going to come and let's create regulations around it. It's always that, okay, there's somebody who's trying to do before it, unscrupulous behavior happens by one of them, which spoils the entire industry name, or an industry in the making can get completely scrapped, is when regulators do come in and say, let us regulate this industry in itself, right? So, like how Flipkarts of the world, Amazons of the world, when they started, not that there were platform aggregator laws around it. It took time, even when Ola and Uber came in, it took time for the government, and it's still evolving as a law, right? Because government also finds loopholes, finds ways on how they can tax more, etc., right? So that is where we are also at the stage. We've been working for almost 2.5 years with SEBI ever since we started that, hey, we want some regulations around the entire industry. There were two bodies we could go to, SEBI or ERA. We have our ERA registration. We've been talking to them. They're saying, hey, you're doing real estate business. As far as under the framework of ERA, we don't see any violation, but that's not enough. SEBI is also a great regulator. So we've been working with them. We were one of the first entrants as part of the SEBI sandbox, which was a regulatory sandbox for attracting new ideas, giving them an environment for them to test, and then make it a law around the entire thing. So this is the new India we're talking about, where the regulators are proactive, where are welcoming newer ideas. It's not like how it was 10 years back, where it was more reactive. Oh, huge scam happened and now we should probably regulate this industry to protect, or something bad happened and now we should do it. Like I said, this is the new India, the new regulators were more proactive thinkers. So finally, SEBI rolled out a discussion paper earlier this month, which would create new sets of regulations for our business, more disclosures, more transparency into investors protection will be again kept at its highest standards, and obviously investor education will also become a much better source through which this platform, what we're trying to do, will become a larger industry in itself. So all in all, in a great direction we are moving towards, but all thanks to all our earliest partners and investors who trusted earlier, when there were no clear regulations around the business, to a point that at that scale today, we've been having that kind of stand to go to regulator that now regulate our industry, because we are very large in general, and the potential for us to grow at 10x the speed with regulations is a huge sight of relief for us, the fact that SEBI is now looking at regulating this space.
One another thing which is holding back NRI community to aggressively invest in India is the repatriation related issues, the currency related issues. You invest money into India, then you take the proceeds into your NRO account, and you need a chartered accountant certificate to repatriate this money back. If this issue can be sorted out, there can be more interest from the NRI community to flow money into India. This is a bottleneck. Have you thought about it? Is there anything happening in this direction to streamline, simplify the whole process?
So we've been trying to do more and more to keep the entire user experience seamless for all our investors. Like, we are a tech first platform in general. So anything which cannot be solved through tech, don't do it, because it's not scalable at the end of the day. So this issue of NRIs has been a common question to people. That whole repatriation, etc., has been a thing. So this was one of our recommendations to the regulator as well. Can investors invest freely and take their money out freely? That's what we've hopefully going to do. In fact, we might go one step beyond. In fact, regulators are also ready to look one step beyond, where they're saying, okay, you can invest in dollar and take dollar back as well. Now, that's a game changer in general for investors. Now, with respect to currency depreciation, there's nothing which we can do as such. It's a Government of India phenomenon and a world phenomenon. Obviously, do your hedging in a way. Take that insurance, whatever is required for hedging, which can protect that downside protection as such. But having said that, I don't see today, especially where we are today, where dollar is about 83, 84 rupees. As such, I don't see dollar becoming 100 in the near short term per se. So probably a great time for you to start deploying capital, because India is also getting stronger from its market dynamics as well. So, but that's a risk which will be there irrespectively you invest in our platform or real estate or any other asset class in general from an investment standpoint.
I personally feel, as a practitioner of finance, NRI community should not be worrying too much about depreciation risk. See, the depreciation, even if you historically look at it, it has depreciated by 4-5% on an average. At periods of time, there were bouts of volatility. Suddenly, the currency moves down or moves up. That's perfectly possible. But let's say that you make 8-9% as a cash flow, and you make some 5-6% by our capital appreciation. All in all, you earn about 12-13%. Your currency doesn't depreciate so much. And look at the developed world, where the interest rates were closer to zero for a long period of time. Forget today's circumstance, where because of inflation and you have a higher interest rate in the developed world. But for most part, They had negligible income out of the fixed income investment into the banking sector. As a planner, I personally feel this is a great opportunity to invest in India. If you make proper calculation, I don't think currency depreciation is a major risk. People become reactive when they see the bouts of volatility, but not on a sustained basis. You make proper calculations over 5, 10, 10, 15 years. People have made money. In fact, in one of the episode with another faculty member of ours, we realized that US markets, in spite of all the liquidity and everything, printing of money and everything, just generated 7% CAGR over a 30 years period. So without that, India has generated much more than that.
Yeah.
And Indian markets, the stock markets, are much more attractive than the investments in the Western markets itself. Dear viewers, we have partnered with Strata to bring you the fractional real estate opportunities in India. If you have an intention to invest in the fractional commercial real estate of India, you can simply use the services provided by NRI Money Clinic. How to reach us? Very simple. Our number is shown here on the screen. Send us a WhatsApp message or just go to the description box. A link is there. Click on the description box. It takes you to the WhatsApp. Send us a message of your interest and we will help you to finalize the best of best properties which are available for you. Why delay? Send that message now. Dear viewers, hope the video that I have done today helped you to understand the finer points pertaining to fractional commercial real estate opportunity in India. If it did help you to understand all finer points of this, do like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share these videos with your near and dear ones, friends and relatives, and all the WhatsApp groups on which you are listed. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another useful topic in yet another video very, very soon. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.